Welcome to the deep dive. Today, we're getting into a book that really made waves in personal finance. Robert Kiyosaki's Rich Dad, Poor Dad.
Oh yeah, definitely a classic. Lots of people have strong opinions on it.
They do. And our mission today is basically to boil down its core ideas for you, give you a quick sense of these two, well, very different ways of thinking about money and wealth.
It's a great framework.
The whole thing kicks off with this contrast. Kiyosaki paints, right? His poor dad.
His actual father, yeah.
Yeah.
Highly educated, government job, believed in job security.
Exactly,
Yeah.
the traditional route.
Yeah.
Versus his rich dad.
Who was his friend's father, more of an entrepreneur, street smarts about money.
And that difference, that clash of philosophies, it really drives everything in the book. It's, fascinating.
It really is. And what jumps out immediately is how it challenges what working hard even means.
How so?
Well, one dad, the poor dad, essentially worked for money his whole life.
Okay, the paycheck focus?
Right. While the rich dad focused on making money.
Well, work for him. Ah, the classic passive income idea.
Kind of. It's more fundamental, though. It shifts your view from just earning income to understanding where it comes from, what kind of income it is.
Yeah, that makes sense. But, that's easier said than done, isn't it?
Absolutely.
For someone listening, maybe stuck in that typical salary cycle, what's the biggest, mental block to making that shift, to making money work for them?
I think the biggest thing Kiyosaki points to is just a lack of real financial education.
From schools, you mean?
Yeah. He argues pretty strongly that schools train you to be a good employee, not necessarily a wealth builder.
Okay.
So he pushes learning practical stuff, accounting basics, investing, how markets work, even some legal know-how.
So things beyond your specific job skills.
Exactly. They're not just optional extras. He sees them as essential tools if you want financial independence. I mean, just understanding a simple balance sheet puts you ahead.
And that ties right into maybe the most famous lesson from the book, the difference between assets and liabilities.
Oh, absolutely fundamental.
It sounds simple, but he defines it in a really specific way.
Totally. It's not just jargon. An asset, in his view, puts money into your pocket, period.
Like rental property income or dividends.
Right. Stuff that generates cash flow, whereas a liability takes money out of your pocket.
Like a car payment or...
Yeah.
Well, he controversially includes your primary residence sometimes.
He does. Because of the mortgage, taxes, upkeep, it drains cash. The rich dad way is all about acquiring those income-producing assets.
While poor dad, and maybe many of us, focus on things that look like assets but actually cost us money.
That reframe on what you buy, it's potentially huge. It changes your whole spending perspective.
Okay, so that's assets versus liabilities.
Yeah.
What about this other big idea, minding your own business? What's that really about? It sounds like, well, don't I already have a job?
Yeah, it's not about quitting your job tomorrow necessarily. It's about building your own thing, your own assets, your own income streams alongside your main job.
So like a side hustle that grows or investment?
Exactly. Building a system, maybe even a formal business structure that can make money whether you're actively punching the clock there or not.
And that's where things like corporations and tax knowledge come in.
That's a big part of it for the rich, using legal structures to optimize taxes and protect what they build, stuff most people aren't taught.
So it's adopting an owner's mindset, even while employed. And linked to that, he talks about working to learn, not just to earn. Why is that distinction so important?
Because skills ultimately are more valuable than just a paycheck.
How so?
Well, Kiyosaki really emphasizes learning things like sales, marketing, communication,
Sure.
these broad, adaptable skills.
Right, not just technical job skills.
Exactly. They make you more versatile, able to create value in different ways, not just tied to one specific role. You're building your own capability, your human capital.
Which makes you more resilient, I guess, whatever
Yeah.
the economy does.
Precisely. And that brings us to how the two dads viewed risk and fear.
Poor dad was cautious. Right. Prioritize security.
Very much so. Avoided risk, afraid of losing money, standard approach for many.
And rich dad.
Rich dad saw risk differently. He embraced calculated risks. He saw failure not as the end, but as, well, a chance to learn something.
So manage risk, don't just run from it.
Right. Growth happens when you step outside that comfort zone, analyze things, and then act, understanding the potential downsides but focusing on the upside.
Okay, so pulling all these threads together then, the big message from Rich Dad, Poor Dad seems to be the absolute necessity of building your financial intelligence. You can't just rely on school or a job. It's about actively making your money work, thinking like an owner, investing, creating, and just constantly learning about how money actually operates.
Yeah, that sums it up well. It's a mindset shift towards active participation in your financial future, which, leaves us with a really important question for you, the listener, to think about. If schools aren't teaching this stuff, this practical financial literacy, what specific actionable steps could you take, maybe even starting today, to build that education yourself? How can you start shifting your own mindset towards assets, towards income generation, towards making money work for you? Where does that journey